Hi everybody, this is a quick video on how to go over the seller's closing disclosure and the ALTA statement. Okay, the seller's closing disclosure, lucky for you, selling is easy. It's a lot easier than the buyer. So the seller's closing disclosure here, you've got a column that goes down the left-hand side of the page. The first half of that column is any money that's coming to you. The bottom half is anything coming off of that. And then the difference between those is your total payout on the bottom. Okay, so just to start up top, the top half, you've got your sales price for the property. And then assessments and HOAs, anything that you've prepaid in advance gets prorated and credited back to you at closing. So you can see here the seller had actually paid the assessments through the end of September, the HOAs through the end of the year. Those get credited and paid back. Then on the bottom of that column, we take off the closing costs, which are broken down dollar for dollar on the second page. Any mortgage payoffs that we're doing there, so those will be there as well. Title insurance, this is where the seller is paying for the buyer's title insurance. That's usually on your contracts. I'm actually going to come back to this in just a second. And then if you're offering any credits, those will be there as well. Down on the bottom, you've got county taxes. So just so you know, if you have a mortgage with an escrow account, part of that monthly payment is probably in there for your taxes. So this year, it's not going to go and pay your taxes because you're selling the property. So you're going to get that escrow money back. So you're actually giving the buyers a property tax credit from January 1st through the day before closing. So however long you've owned the property for the year, you just give them a credit based on last year's taxes. That way, when they pay taxes in November, they're kind of settled up with you for the year. Okay. And then the difference between these two is the total payout there on the bottom. Okay, page 2 is a dollar for dollar breakdown of the closing costs. So starting up top, you usually got the closing fee and the title search fee. The closing fee is for our office doing the paperwork and then for us to do the closing. The title search is just to make sure there's no liens on the property or anything we need to address before the buyers take ownership. The next section down, the big one there is usually transfer taxes. So that's a tax for Uncle Sam based on the sales price. So nothing we can do about that one. We've got to collect that. And then the bottom of that page there is kind of a breakdown of miscellaneous fees. The big ones there, usually you'll see the HOAs. They're actually allowed to charge to tell us how much the HOAs are and if they're current, so it's called the estoppel letter. So any of the fees that they charge for that will be there, as well as any other miscellaneous things like home warranties or surveys. The big ones in this section are usually the breakdown of the realtor's commissions on the seller side. But there is something I'll touch on here. You'll see that there's a title, a charge down here that says optional. It's not actually optional. Sometimes this confuses people. This is really just a formatting thing in the state of Florida. The total title insurance that you'll pay is the amount that's on that first page and this amount. But for some reason, they make us break it down into this because title insurance is technically optional. However, most contracts, 99.9% of the contracts do require title insurance. So while it's technically optional, they break it down this way. But the total number you'll pay is based on the sales price of the property. And it's this number plus the number that's on the first page. So I just like to point that out because sometimes that adds some confusion. And then you'll have a total there on the bottom. You'll see that this total should match the total closing cost number on the first page. Okay, when you get over to the ALTA statement, it kind of confuses people because there's a lot more going on here. It looks like an Excel spreadsheet. All this does is takes the seller's numbers and buyers and puts them on the same page together. Okay, so on the seller side, you just focus on that left-hand side. You'll see there's two columns, one for debit and one for credit. The debits are any money that we need from you. The credits are any money coming to you. And as you go down, you finally get to your final page. You'll see that the totals are there, the debits and credits, and they give the difference on the bottom. That's usually your payout. The big thing here is you just want to make sure that that number matches the same bottom line number on your closing disclosure. That wraps up the video on the seller's closing disclosure and ALTA walkthrough. Hopefully that added some value and some education to you so you can know what you're looking at with your financials. If you did like the video, go ahead and give us a like and a subscribe to the channel, and we look forward to seeing you soon. Thanks.